Welcome to the Metals Investment Forum Backstage Interview. We are here with Alexco's CEO, Clynt Nauman here. Clynt, welcome.
Yeah, thank you, Chen. Nice to be here.
Yes, thank you to be with us. We have a lot of questions from the Metals Investment Forum. Unfortunately, we didn't have a chance to answer those. So let me try to go through all these questions first from the audience. So then we can go through some other general questions. So first, one of the audience want to know the detail of your production ramp up, how many tons you're doing per day, what kind of grade, how do you do grade control, and then your cost, roughly.
Yeah, so we are going through the initial sort of scale up, ramp up, putting mines into production. We have two primary underground operations that we are developing at the present time called Birmingham and Flame and Moth. Between them, those deposits have the better part of 20, 25 million ounces of silver, which will be mined over the next 5 or 6 years. But while we're going through this ramp up process, we are actually mining from a third deposit, which is providing feed to the mill and covers us off for all of the commissioning activity and other activity that needs to take place while we're trying to bed in and ramp up this operation. So in terms of the question, how much are you producing? What kind of rates are you mining at? We are going through a predetermined period where we're running the mill at 2 weeks on and 2 weeks off, which is the plan while we go through the process of refining, the mill circuit, looking for any irregularities in the circuit or in the recoveries or in the concentrate grades. And so in that period, we would normally be milling 200 to 250 tons per day. So we are shipping concentrate from the Keno deposit. The Keno deposit is certainly overachieving in terms of both grade and in tonnage. And so I think we anticipated 700, 800 grams per ton silver grades from Keno, and we're certainly far exceeding that. And the mill performance, on initial indication is extremely good. The silver recoveries are more than 90%. And as we anticipated, 89 to 90% of the silver is finding its way into the lead concentrate, where the payability of the silver is higher. So it's all looking, very good from that perspective. The other portion of this process is that we have to do a significant amount of underground development to get these other mines, ready to produce. And that's where, we're being slowed down by a combination of the protocols and restrictions that we have to abide by relative to the COVID situation. And secondly, by the variable rock conditions that it's taking workforce, we're self-mining here a little bit to get themselves, used to the variable rock conditions in which we're operating. But the whole process is moving forward, not at the rate that we had originally anticipated pre-COVID. Is delayed by 3 or 4 months, but so far so good.
Oh, great. Yeah, can you describe a little bit of a COVID protocol? I heard you talk about that a little bit in your conference call recently.
Yeah. So it's very rigorous, so in Canada, the interterritorial and interprovincial borders are still locked down. So we have a regulatory and a health exception to that rule. So we're actually able to bring people from other jurisdictions to the Yukon, but we have to keep them separate from the rest of the workforce. So our workforce is currently comprised of maybe 125, 130 people. Only about 40% of those would be Yukon based. So when you're talking about a workforce that is rotating in and out of your project on a 2 weeks on, 2 weeks off basis, we have a protocol which requires us to keep people from different jurisdictions separate. So they have to travel on different airplanes. They have to use different pickup trucks. They cannot intermingle with the general workforce population in the camp. They have to have their own rooms. Their meals are delivered. They're not able to go to the cafeteria, etc. And there are very rigorous protocols about the actual crews themselves, the surface and underground crews. So it has my hat is off to the employees that, this is not easy. Our employees have performed extremely well, given that, they have these isolation requirements, both, certainly where they're living, where they're domiciled, in our camp, and in the workplace. In addition to that, we have professional medical people on site, on the payroll, if you like. And so, everybody is checked every day. We have, in the event that there is anybody has even a sniffle, we have isolation and quarantine facilities specially set up in, actual houses on site. So it's very rigorous. It certainly adds costs. I think everybody, would agree to that. And it has the effect, especially during an initiation and ramp up process of sort of slowing your project down. That plus, variable rock conditions take a while to get used to, and so it's a much slower process.
Yeah, I understand. Congratulations to getting through this difficult stage with all these COVID restrictions. Hope you will start to vaccinate your workforce very soon.
Yeah. So just to that point, I was informed just the other day that the fridges required to house the vaccines arrived on site about 2 days ago. And our entire workforce is being vaccinated this Wednesday, is what I heard. So okay. Hats off to the Yukon for making that happen. That'll be hugely helpful, although the restrictions will not be changed.
Okay. Well, that's excellent news. Hopefully we're back to normal very soon, in a few months. Well, you're ramping up, as you mentioned. And there's a few other questions from the audience. One is, what's your expected all-in sustainable cost and how much you need to pay, the Wheaton guys, Wheaton Precious Metal? What's your, I understand you renegotiate the deal at the bottom of the market, which is provide excellent backbone for your production.
Right. So, in terms of the all-in sustaining cost, I think that, the pre-feasibility study gives you guidance to that. It's, depending upon the price of silver, it's anywhere from, $12 to $14, something in that type of range. And certainly in the wheat and precious metal arrangement, it is one where when at lower silver prices, meaning in the $14-15 range, they pay close to spot price for the average spot price for their silver. But as prices go up, they pay less for their stream, which is 25% until they get to $23, and silver's $23. They pay 10% of the spot price of silver. But no matter what, it's a downside hedge for us. And there's no case in the silver revenue stream or the silver revenue stream where we are not sort of incrementally adding revenue as the silver price goes up.
Okay, great, excellent. So there's another audience has another question. Basically, when you will start to have, get your cash flow positive, basically starting concentrate, start covering your expense. And you mentioned sometime getting production by mid of the year. Is that around the same time?
Well, we think that it's certainly going to take us through the second quarter to try and figure out, exactly what this thing is going to look like when it finally, hits the production stride, which is 400 tons a day. So yeah, it's well into the third quarter, the fourth quarter, that type of time frame that you reach this cash self-sufficiency point that that we're aiming for. To reach that point, we have to have the Birmingham and Flamermoth mines on stream, and at the current time they're being developed.
Okay, excellent. We only have a little bit of time left, so we want to mention your exciting exploration opportunity. As we know, Fosterville, which we're not very far from where you're visiting, they have a very, very nice discovery, high grade, right underneath existing gold mine. You seem to have something similar, a high grade silver right underneath your existing silver deposit. Can you describe it and what's your plan? And then how do you plan to explore that when the investor will hear about it?
Yeah, so about 150 meters below the northeastern portion of the Birmingham deposit, we have identified a relatively flat-lying but continuous, or appears to be continuous, zone of mineralization that is 500 to 550 meters long. We have a number of holes in it. The mineralization is generally between, say, 3, 4, and 8 meters thick, and the grades range anywhere from 1,500 to 3,000 grams per ton. So it's a significant discovery, and we know the length of it, if you like, or as far as we traced it anyway. So we, at the present time, we have mobilized already 4 drills Four drills will be mobilized, 2 on site right now, 2 coming, that will be drilling off that zone over the course of the next 3 or 4 months. And if that drilling is that to be infill drilling, and drilling in the vertical sense as well as the horizontal sense along this thing, assuming that drilling is successful, then we will publish a new reserve and resource statement in the 4th quarter of this year. So yeah, that work is all ongoing as we speak, and results will be released as appropriate.
So basically, you will gradually release. I mean, people are excited about your drilling result, obviously. Yeah. So your planning is would that closer to the Q4? People or maybe we can hear more about that in the summer.
Yeah, I mean, it's this is very, it's very high grade and relatively thick material. So like I say, it's a significant discovery. We've always tended to, have enough holes in hand, to sort of understand the geological conditions that we're dealing with before we release information. And so it will not be a hole by hole basis for sure. There's 40, 50 holes that need to be drilled there at the very least. And so, yeah, I think that we'll probably release those in batches and then try to tie the whole thing up, in the 4th quarter.
Okay, great. Thank you, Clynt. And thank you for your time. It's an excellent interview. Maybe next time we will talk more about your drilling results and production results.
That would be excellent.